Good morning, everybody. Happy Tuesday. We are already about 2 minutes into past the hour, so we're going to get started here in just a second. Hopefully, everyone can hear me. It sounds like audio and visual is good, so I think we should be ready to get started. Okay, good morning, everybody, and happy Tuesday. Serge Berger here from thestudytrader.com. Great to be here. Thanks for joining us here this morning. If you're here for the first time, as I always like to say, please make sure you subscribe to our channel. It's obviously free. You get updated in real time with when we go live and do analysis and all sorts of good stuff. Also, please make sure you give us a thumbs up like on the videos that you watch, including this one every morning. That would really help us. Top few things on the notepad here this morning. Number one, keep in mind it is now sort of like the dog days of summer that if we typically have them in July, then it gets a little bit more active, and then you typically have it again at some point in August, unless there's like dramatic news. Markets are quite quiet right now, and while that can change at any given point, it is also one of those situations right now where I think outside of a few momentum trades, which we'll look at here in a minute, and maybe diversifying the longer term portfolio more, which I would suggest most people do. No one's doing it, or very few people are doing it. Outside of that, and that's very crazy important, there's not a whole lot to do, to be quite honest with you. So I want to have a word on that as well, what that means from a patience perspective. Then I want to show you an update on Intel. We've been talking about Intel a lot, and I have another update here this morning for you. Stock is up another 6% this morning or something like that. So we will be looking at that here together in just a minute. So let's get started. Let me open up these other two charts. Here we go. All right, I found my two charts I want to show you guys as well. All right, we should be good to go. Okay, so again, as I like to do every morning, and I will continue to do this because I think still most people don't care because it hasn't mattered. Have a look at the performance of various asset classes year to date. And I threw it Intel this morning because we're going to talk about Intel in just a minute. But again, it should be very clear and notable to people that yes, while the S&P is up and the NASDAQ 100 is up 13%, it is very low, and Max 7s are up. They are mostly underperforming almost everything else. And I say almost, there's obviously stuff that's doing worse, but hard assets, non-US stocks, they are doing well. And they are beating the S&P hand over fist, no questions asked. So that needs to be reiterated, right? So our call at the beginning of the year, and actually not quite a year ago, 11 months ago, that hard assets are going to outperform, likely for years to come, maybe a decade, like that has started. Now, I don't know. I don't have a crystal ball either whether it continues at this rate, but it has started, and I don't see why that should end in any meaningful shape or form outside of sort of, mean reversion moves. If we have risk off in the broader market, that would be, I would expect a setback there too, as everyone would take down risk like we saw in April. So that's point number one. Point number two, just quickly, as far as I always like to give people a bit of framework around the S&P 500, because that is, of course, where risk assets are concentrated from a correlation perspective. I just wanted to point this out again. We haven't had, more than a one-day pullback in months. We had a one-day pullback on the 1st of August. We had a more or less a one-day pullback at some point in June. So, by all means, there is definitely mean reversion that can happen here pretty quickly. So we just want to keep that in mind. But I think more importantly, just kind of quickly going below the surface, and I want to then move on to Intel, is this, right? So we have this very bifurcated economy, and one thing that I pointed out to some clients yesterday is that we do have manufacturing actually doing very poorly right now. That does not mean it can't get better, but I will tell you the reason why everyone wants rate cuts is because rates are just too high for them to continue to expand. We will see what the Fed does. Maybe we get something on Friday at Jackson Hole. Maybe we don't. It's usually a bit of a yawn, but we'll see. So it's just important for everyone to understand that the reason the S&P is up once again this year is not because everything's awesome, but because we have stimulative accommodation, right? So we've got U.S. government's running about a 7% deficit yet again this year. The Europeans are finally stimulating, meaning like investing, right, with defense and stuff like that. The Chinese are stimulating. And so basically global money supply is up, and that's why risk assets are up. However, in the U.S., and again, this is not me making stuff up, this is factual. You can see this, that Max 7 stocks, even though they're up on the year, and they're actually carrying the S&P on the V-shaped reversal off of April, they are still lagging many other asset classes, including gold, silver, all the hard assets, or many hard assets, foreign stocks, Chinese stocks, European stocks by a mile. So that's important to keep in mind. And I realize most people don't care about this yet because the S&P is still up on the year. I think the threshold for people to start panicking is if they have a year where the S&P either doesn't go higher or is up only 5% on the year, right? It doesn't, forget a down year. I think the pain threshold for people is very little right now. They don't realize it yet because it hasn't mattered, and the headlines continue to be very supportive of bullish animal spirits. But underneath the surface, that's why I want to bring up this point here on the manufacturing. There is that K-shaped economy. CapEx for the most part in tech land is only in the AI expansion theme, and that will slow at some point. There's no doubt about it. I don't know when that is. I would imagine it won't be too long for now. So that's the driver. And if NVIDIA reports something that's a bit uncertain next week, then who knows? I have no bet on that. I'm not willing to make a bet that's a way too bifurcated, high stakes bet. But if there were to be a hiccup on that, and I have no expectation, nor do I know, but if, I would certainly be doing something on the bearish side on AI very, very, very quickly for mean reversion purposes. So that's one point I thought I would point out, which gets us to the Intel situation. So I want to point out a couple more things on Intel. So first of all, just in case you haven't seen this yet, we've been talking about it for the past week or thereabouts. The price of Intel, of course, share prices have rallied quite sharply last week on the back of the government taking a 20 or 15% stake or something in the company for national security purposes. Just reiterating that. I also made a free video this morning that many of you are going to receive by email because you signed up to our email account. If you're not, you're hearing it here in a little bit less detail. But basically, what we still think, and this morning Intel's currently trading around not quite $25. So that's, getting towards the upper end of that range once again. There's still more momentum that needs to be taking place here. But we yesterday heard from SoftBank, which is that large Japanese tech investment company, that they are investing a whole bunch of money as well in Intel. That's why the stock is up this morning a few percent once again. As I said before, I think it's up now. Let's see. Up about 5% now this morning. So again, right back to kind of the highs from a couple days ago or so. Again, the stock has not yet broken out of this box. So that's important to understand, but we do have momentum. So if you are using our trender indicator, and I say this every day, I really, really hope you are because it's freaking awesome. We had a little bit of a sell signal that reached a free profit target in July, but now we have a significant new momentum buy signal, and the stock this morning is currently at the pre-market trading around up here. So we would be trailing this trade on Intel higher, which is probably going to be using a trailing stop here. That's using this purple line. If you're using the trender, you know what that is. If you don't have access to it, please make sure you get the trender and you'll have access to all that information. So we think Intel here, again, outside of any meaningful change, all of a sudden, you never know nowadays, the headlines come fast and furious, but outside of that, we think Intel can reach, 25 this morning, maybe then 26, and ultimately, from a more near-term perspective, 29 fills the down gap from August 1st of last year. That's the short term. Now, I want to give you one more point here on Intel that I think is very supportive of the argument for this stock to ultimately come a bit more to the fore. And keep in mind that it takes institutional adoption. So this is an interesting, in order for a stock to go higher. So this is an interesting statistic I came across. What you're looking at here is basically EBIT margin. So that's earnings before interest and taxes. Currently now versus an average of 5 years ago. So essentially you can see that the margins as they are right now are very, very low. In fact, they're crappy negative on Intel. And you can see the NVIDIA's margins are very good, right? So from a mean reversion perspective, if, Intel's getting investment, which it is, from the government, from SoftBank, right? There's a bit of a tag team going on there. That's very bullish for margins, meaning margins should get better, right? Expansion of margins. And so you would imagine that Intel might then start having positive margins again. So that's more of a fundamental story. I know this doesn't get too popular with the retail trader, but I'm hoping I'm able to add value here beyond what most of the freak show out there is doing, currently chart chasing and doing just no zero analysis at all. We live in a gambling bubble, right? So hopefully this is something you guys can use. I'm going to leave it at this right now. I have to jump on over to do our Inner Circle Market Rover member session. For those of you guys that have access to the Market Rover, we'll see in about 5 minutes over there. But hopefully this is helpful for you guys here on this Tuesday morning. Again, keep in mind, Intel, interesting story. S&P 500, quietly still kind of somehow pushing higher, although hasn't really made a lot of progress for a few days now. And we are in the dog days of summer, which typically, that's not unusual, but it can change pretty quickly. We said this at the beginning, outside of August, that August is typically a tale of two markets. Is either extremely boring or it's crazy volatile, and so far it's the former. So that's all we have here right now. Make sure you join us back here again tomorrow morning. If you're using the Market Rover, I hope you do. We'll see you in about 5 minutes over there and doing our analysis over there. Take care, and we'll see you soon.